Hello, I'm Ron Wilson. In this month's news, the federal government has announced changes to rules around its single dispute resolution scheme, including a requirement that current members of external dispute resolution schemes retain their memberships for up to 12 months after AFCA's commencement. As part of further proposed reforms to superannuation, the government proposes to give APRA greater powers over superannuation funds and provide workers with more choice over their selection of fund. The government has also proposed that ASIC be given new product intervention powers over risky or unsuitable financial products coming to market. And in international news, the Fed left interest rates on hold at its September meeting, while commencing its balance sheet normalisation by slowing its reinvestment of maturing Treasury bonds and mortgage-backed securities. Andrew Stark has the details.
The federal government has announced amendments to laws establishing its new one-stop shop for financial consumer complaints, AFCA. A revised bill will allow the government to appoint a minority of the AFCA board, including the independent chair upon its establishment, and will require current members of FOS and the CIO to maintain their membership. Another key amendment under the bill is to enshrine key features of the SCT complaints handling model, including requirements for handling death benefit complaints, the decision-making test, and the unlimited monetary jurisdiction to provide certainty to stakeholders. The SCT will continue to operate until 30 June 2020 to resolve its backlog of legacy complaints. The bill also contains a requirement designed to improve the transparency of internal dispute resolution by requiring all firms to report internal disputes to ASIC, which will in turn publish IDR data at a firm level. The government has reintroduced a package of reforms to the superannuation industry, which lapsed following the dissolution of Parliament last year. Included in the reforms is legislation to make superannuation funds more accountable for how they spend members' money, and strengthening APRA's power to intervene if a fund is not acting in its members' best interests. The reform package will also give more than 1 million workers the right to choose their own superannuation fund if they are currently prevented from doing so because of enterprise bargaining agreements or workplace determinations. It will also close a legal loophole allowing workers to be shortchanged their full SG entitlements by employers using personal salary sacrifice contributions to reduce or even satisfy their employer SG obligations. In an address to the AFA 2017 National Advisor Conference, Minister for Revenue and Financial Services Kelly O'Dwyer announced that the government will soon release draft legislation covering the introduction of new obligations around the issuance and distribution of financial products and new regulatory powers for ASIC. The government considers that in the event that risky and unsuitable products come to market, ASIC should be able to step in and use proposed product intervention powers to protect consumers. Some of the steps which ASIC would be empowered to take include amending product marketing and disclosure materials, imposing consumer warnings and labeling changes, restricting how a product is distributed, and banning products if the circumstances warrant. The RBA kept the official cash rate at 1.5% in its October board meeting, which was consistent with market expectations. In support of its decision, RBA Governor Philip Lowe referred to recently released GDP data. Lowe said the Australian economy expanded at 0.8% in the June quarter. This outcome and other recent data are consistent with the bank's expectation that growth in the Australian economy will gradually pick up over the coming year. Recent economic data suggests the Australian economy is losing ground after recording GDP growth of 0.8% in the June quarter for annual GDP growth of 1.8%. Domestic spending, which was one of the key contributors to Q2 growth, has since stalled, with retail sales declining by 0.6% in August after contracting by 0.2% in July. As a result, the annual pace of growth in retail sales dropped from 3.7% in June to 2.1% in August. With retail spending declining across all states and territories, the annual rate of growth in retail sales fell well under the longer-term average of 4%. The Fed kept US interest rates on hold at its late September meeting, but at the same time announced that it will begin balance sheet normalization in the December quarter by slowing its reinvestment of maturing Treasury bonds and mortgage-backed securities to amounts above preset caps. The Fed's balance sheet was boosted by the purchase of Treasury bonds and mortgage-backed securities, which peaked at $4.5 trillion when the Fed ended its QE in October 2014. Since that time, this level has been maintained as the Fed was reinvesting or rolling over the bonds as they matured. FOS experienced a 16% increase in disputes received during 2016-17 over the prior financial year to almost 23,000, primarily due to continued growth in general insurance disputes. FOS said the result was mainly due to an increase in general insurance complaints of more than 2,500, owing to a continuation of industry-specific issues including higher claim numbers, organizational changes, and the impact of Cyclone Debbie, all of which may have affected insurers' internal dispute resolution. In terms of disputes accepted by FOS, credit disputes were the dominant category, representing 43% of the total for the year. The Corporations Amendment Crowdsourced Funding Act 2017 commenced on the 29th of September, after receiving royal assent on the 28th of March. This act includes the requirements for eligible companies and eligible offers, requirements for how the offer must be made, and obligations on crowdsourced equity funding, or CSF intermediaries, that is, platform operators, and in respect of the platforms. An eligible company must have less than $25 million in consolidated revenue and gross assets, and may only raise up to $5 million in any 12-month period. Retail investors face a cap of $10,000 per issuer per 12-month period. Each CSF intermediary is obligated to reject applications if, having regard to CSF offers for which they are the responsible intermediary, the cap is breached. To support the CSF regime, ASIC has released 2 new regulatory guides for public companies and crowdfunding platform operators respectively. RG 261, Crowdsourced Funding Guide for Public Companies, assists companies seeking to raise funds through CSF to understand and comply with their obligations in the new regime. RG 262, Crowdsourced Funding Guide for Intermediaries, assists crowdfunding platform operators or intermediaries seeking to provide a crowdfunding service, as there are unique gatekeeper obligations for operating platforms for CSF offers.